Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Tuesday, January 13th, and this is your London Open Prep. Two themes frame the session. The U.S. inflation report is due and seen broadly stable, and the yen slide is accelerating into key levels as Japanese politics and policy uncertainty linger, while oil firms on unrest in Iran and European equities point higher. First, the macro backdrop. The U.S. Consumer Price Report lands at 13:30 GMT and is expected to show prices broadly stable in December, with limited implications for the Federal Reserve's policy path. Even so, renewed chatter around Fed independence is coursing through markets, creating a push and pull in the dollar and adding a safe haven tone in places. In Europe, stocks are set to open broadly higher with geopolitics in focus, and Brussels is weighing a tighter stance on Chinese tech. France's budget standoff is reigniting debate over using a no-vote procedure to pass bills. In Japan, policy and politics are front and center. Economy Minister Minoru Kyuchi is urging early passage of the 2026 fiscal budget and defending the government's fiscal stance, while signaling Japan isn't yet in a position to declare a clean exit from deflation. Separately, Prime Minister Takaichi is reportedly considering dissolving the lower house this month, potentially paving the way for a snap election in February. Against that backdrop and lingering uncertainty around the central bank, the yen remains under pressure, with the dollar-yen pair pushing toward levels last seen about a year ago and intervention chatter never far away. Turning to currencies and commodities, the dollar is mixed into the CPI release. Sterling is firmer, with the pound-dollar pair edging higher as those Fed concerns simmer. While the euro-dollar has slipped back with a more cautious tone, the Australian dollar is softer after consumer confidence fell to a 3-month low, and the Indian rupee is weaker ahead of U.S.-India trade talks, nudging the dollar-rupee pair higher. The Swiss franc is catching a safe haven bid, weighing on dollar-franc. Cross-yen pairs are buoyant, with the pound-yen at its highest since 2008 and the euro-yen holding gains. On commodities, oil is grinding higher as markets watch nationwide protests in Iran and the risk of disruption in a critical supply region. Gold is a touch softer into Europe amid renewed dollar buying, but its downside looks limited by a supportive backdrop, and silver is hovering near record territory as haven demand spills into metals. In India, local gold prices are steady. For markets, that mix leans modestly supportive for risk sentiment at the European Open, with a dollar that's selectively stronger versus higher beta and Asia currencies and a firmer energy complex. Haven dynamics are splitting flows, helping the franc and precious metals on the margins. Looking ahead, the calendar is dominated by US CPI at 13:30 GMT. UK gross domestic product is also on the radar, alongside US-India trade discussions, and any headlines out of Iran or Brussels on tech policy could sway sector tone. What I'll be watching today: the Aussie dollar against the US dollar, where a downtrend could persist if weak confidence meets a steady US inflation print. Dollar-yen near that big round number, watching for an uptrend test and any hint of intervention rhetoric. The pound-dollar for signs the recent updrift holds if Fed independence concerns linger. Dollar-franc for a continued drift lower on safe haven demand. And in commodities, Brent crude for an uptrend extension on Iran headlines, with gold likely to consolidate while silver tries to stretch higher. The takeaway: markets are balanced between steady inflation expectations and rising geopolitical and policy noise. Optimistic into the data, but aware that the footing is still fragile. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.